The stock market has produced unprecedented returns for investors since the housing crisis in 2008. Yet despite this, despite rampant inflation, unprecedented levels of US government debt, and a Federal Reserve that is just finally deciding to shut down their bond buying program, the economy keeps on trucking along. Then, all of a sudden, Netflix announces that they're not going to grow as fast as they've grown in the past. And then the poop hit the fan. The stock market has a lot of volatility right now. Investors are concerned and fearful. Could this be the beginning of a massive stock market correction? Should you sell all of your stocks and just hold cash? What am I doing with my money right now? And maybe the most important question of all, what should the average Joe do with their money? Is this the beginning of a massive stock market correction? Maybe. But I would challenge that with a question of my own. Why do you care if there's a potential upcoming stock market correction? We've had market corrections before, and we will have them again. For some reason, it seems that investors expect that markets will always go up and never go down. Then again, it has been 14 years since the housing crisis of 2008. And I believe many investors either have just forgotten what that experience was like, or there have been so many new investors in the market, they just weren't old enough to have experienced that. At the end of the day, fear and emotion in the markets from investors stems from a lack of understanding on how markets work, but primarily because for investors, there is a disconnect between what we say and what we actually do. In my previous video, I stated there are 3 important questions, critical questions to answer when you first get started investing. What are you investing for? How long do you have to invest before you need your money? And third, how much risk do you want to take to achieve your goals? If you are concerned right now of a market correction, then I would say that there's a disconnect between your investing goals and what you're actually doing with your money. Here are a few quick examples of the disconnect that can occur between your goals and how you're currently investing. Let's say you're ready to retire really soon, and you are 100% invested in the stock market, but you don't plan on living off of the income coming from those assets. That's a problem. Let's say you need to have $100,000 in 1 year, and you have exactly $100,000 right now, but it's fully invested in the S&P 500. That's a problem. At the end of the day, when you are putting money at risk that you cannot afford to lose, that causes stress and anxiety. Now is the time to reevaluate your investing goals and make sure that they are aligned with your investing strategies. This is a personal decision for every investor, especially when the stock market is crazy and people are making emotional decisions. What I can tell you is this: I am not selling all of my investments and holding cash. You see, by even entertaining the idea of selling all of my investments and moving into cash, this is communicating that I'm confident that I can time the markets, not once, but twice. I'm saying I can call the top right now, and in the future, I'll be able to call the bottom and invest at the right time. Problem is, history is full of investors that thought they could time the market but got burned really bad. Even today, there are some investors right now that are putting everything into cash. Maybe they're calling the top correctly, maybe they're not. There's a wise saying out there: time in the markets is better than timing the markets. This chart here is an excellent example as to why you just cannot try and time the market, because all it takes is missing just a few excellent days and your returns are terrible. If you were to exclude the worst 10 days per decade, there were some decades that you had amazing returns, but look at the consequences of missing the best days per decade. Remember, these days don't happen consecutively either. They might come right after a really bad day. And if you're not in the market at the time that it happens, you miss out. If you compare the excluding of the worst days and excluding the best days, and then you can just see what the actual returns would be if you just stayed invested in the market, the best bet for the average Joe investor, and for most investors really, is to just be in the market. Timing the markets is a loser strategy. However, making a commitment to invest over the long term every single month, aka time in the markets, is the best way to have compound interest work in your favor. Nothing Well, nothing different to be specific. I spoke in detail about my current investment strategies in my previous video, specifically on retirement investing and my non-retirement investment strategies. There's a link to that video in the description below, and it will be available in the end screen at the end of this video, so check that out if you haven't seen it. The only additional strategy I'm leaving open for myself, given how the markets react, is the ability to use that options account that I'd set aside to buy quality dividend stocks instead at really great prices. Otherwise, it's business as usual for me. Every month, buying dividend stocks and investing for my retirement. I am not a millionaire investor. I don't run a hedge fund. My name truly is Joe, and I live in the same neighborhood that I grew up in with my wife and my 4 kids. I even help coach my kids' Little League baseball team. As the average Joe myself, I refuse to try and time the markets. I would strongly encourage you to take the time necessary to answer those 3 critical investing questions if you haven't done so previously. You need to know clearly why you're investing, how long you have to invest, and what level of risk are you truly comfortable with. Once you are clear on these answers, you can create an investment strategy that is in alignment with your investing goals. Don't let the noise from the news and all of the media and investing outlets deter you from reaching your goals. If you like this video, check out this video right over here. In my next video, I'm gonna be making the strong case for my favorite investing strategy, one that will guarantee you ever increasing cash flow every single year. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.